Okay guys, this is just a bit of a feedback on um, that task that you had to complete for CPOD and CPOR. So I just quickly want to go through that and show you what was expected. So this is more or less what you were given, and then you had the template that you had to build up this structure and basically do the same calculations as what we discussed in the lectures. So firstly, you did your site establishment, so all of these items I did for you. So you had a logical flow of your project and your cash flow. Okay, so I just want to put this on the screen. So you have been appointed as construction manager on a new house construction project and have to calculate the working capital needed. You are given the table 4.1, which includes the projected cash flow expenditure for the duration of the project. Okay, so you've got that's the sketch of the project, and then first parameter is these values include a 5% contribution to profit and overheads. So it's your value, or it's your cost plus 5%. Okay, so we'll get to that now. And then you've got a 10% retention is applied to payments at the end. Okay, so that's straightforward. And then you've got your costs are to be paid at the end of the month of which they occur. Okay, so remember there's two things. You've got your cost, and then you've got your interim payments. Your interim payments are done 2 weekly. Okay, but your costs, that's now your buying costs and your labor costs and all those costs, it's only going off out of your account at the end of the month, whereas you're getting an income every 2 weeks. Okay, so hopefully that makes sense. So because this might have thrown you off a little. So then the final question is calculate your working capital required at the end of both month 1 and 2. Okay, so working capital is your outflow of money minus your inflow. Okay, so I think that's fairly straightforward. So getting back to the example, so your weekly value of work done, remember this is values, is basically just adding those columns. Very straightforward, and you pull your formula through. You've got your cumulative value, which is in your first month is just that one. In your second month is just the previous month plus that month. I think that's fairly straightforward. And then okay, and then you go on, and then you just pull your formula through, and you will see that it's basically that. So you've got your cumulative value. So after month 1 you've done 24,000 rands worth of work. After week 1, after week 2 204, and then you can actually put in your first claim, second claim, third claim, etc. Okay, so I think that everyone understands. Okay, then so we're only focusing here at that section now. So your cumulative cost is your cumulative value deducted your 5% markup that you have. Okay, so now this is where your monthly or 100% is basically your value of work, or your cost is 100%, and then you add a 5%. So you will see that there is subtracting that 5% from your actual value is done in the manner of you 24,000 rand, that value of work that you've done is your cost plus 5%. Okay, so now you want to deduct that 5%, which is now basically that 100. So it's your cost. Your cost is represented by the 100, and the 105 is the value that you're claiming from your client. Okay, I hope that makes sense. If not, you can just pop me a mail if that is a difficult thing to understand. But it's the same with adding VAT and subtracting VAT. That calculation basically. So you've got your cumulative weekly cost that you calculate basically from your cumulative value. So that's just calculated on each of them. Again, with the 204, you just subtract your 5% markup, and you continue like that. Okay, then you've got you pull that through with your formula. Okay, now your claims comes in. So then you've got your income. So after month or week 1 and 2, there's no income. Here you put in your first claim, and it's paid out 2 weeks after. Okay, so it is your total cumulative value after week 2 is 204,000 rand, so you can claim that. But now you need to remember there's a retention that's also applied to that. Okay, so your 100% that you're claiming is the 204, but the actual amount that you're going to get is that 100% minus your 10%. So you're going to get a 90 over 100. I think that's fairly straightforward. Okay, so that's your first claim. So you accumulate. Okay, and then I just added a cumulative income here as well, just to show you what the cumulative income would be. Okay, so after the first 2 weeks of work, you can claim 183,000, and it's paid out after the 4th week. Okay, then after week 4, you put in your second claim on 424,000 rands worth of work done. Okay, so your income is your total value done to date minus your previous certificate. Okay, I think that's straightforward, and then just subtracting your retention to get your income or your claim for that month. Okay, that's straightforward, and then your cumulative value is just that one minus that one. Okay, so the question goes up to month 2, so you just do the same for the next one is after the 6th week. You can actually put in your claim, which is paid out after week 8. So if you put that one on, then you've your total work done minus your previous claim to get your amount, and then you've got your cumulative amount here at the bottom. Okay, then getting to your working capital. That is also getting back to your working capital is your outflow minus your inflow. Okay, just put this one back there. So now your cumulative income, so this is your cumulative cost minus your cumulative income. Okay, so our cumulative income has been, or costs up to at the end of month 1 was 403,000. Now this you have to pay to your salaries and your suppliers and so on. So this is your actual cost that you have. Okay, and then you have your cumulative income for that month is 183,000. So it's just 183,600 minus your cost, and that's your credit deficit after month 1. Okay, then the same applies after month 1. Your cumulative costs amounted to 902,000. Thus your expenditure or your cash deficit or your capital that you need after month 1 is your inflow minus your outflow. Your outflow minus your inflow. You can do it vice versa. The one will just give you a positive answer and the other one will be a negative. It's usually easier if you do your cost minus your income, because if it's negative, then you know you have a deficit. So that's the rationale behind that. Okay, and then if you want to do some extra practice, you can actually do it for month 3 as well. And yeah, that's more or less it. So thanks guys. I'll be posting this answer for you on Blackboard together with this video. So yeah, if there is any questions, please do not hesitate to contact me. Yeah, thank you.